Get out now. I'm your host, Steve Van Metre, and thanks for joining me today. And our show today, it's Bank of America's alarming signs of an impending market crash. And that's what we're doing at the Bank of America Tower today to find out why they're telling people to get out of the market. And that's why every Sunday we like to look at the technicals, momentum, and machine positioning to help you be a better trader and investor. And in this case, we're going to look at what Bank of America is saying these signs are and show you how to properly position. Now, at the end of the show, we've added a new signal, one we think is about to trigger and we think has a really good potential using our reports. And speaking of our reports today, there are only 3 coupon codes for a free month for both CTA and Momentum Timer Pro. If you missed them, you got to grab them before they're gone. All right, with that, let's head over to the Bank of America story. As we see, Bank of America's Hartnett says to sell this epic stock rally as risk linger, saying there's even bigger risk to the market that's coming. And we're going to make the case of why they're right about it and where they actually may be wrong. But let's look deeper into their story, and then we'll see how the machines are positioned. Because what I want you to understand is a lot of the market, it doesn't matter what opinion is. What matters is flow. And machines, well, they've got a lot of it. The S&P 500's recent low reached on October 27th has been followed by an epic risk rally. This from a recent note by Hartnett, referring to a broad advance marked by narrowing high-yield spread, jumps in small caps, shares of U.S. regional banks, and distressed tech and China-exposed assets. He said investors, well, they ought to fade this rally. And so one thing I want you to understand is a lot of these things that he's sharing with us, well, they're actually real good reasons why. And in the past, they mattered a lot. But what has changed since the global financial crisis is more money is being run by machines than ever before. It's not even comparable to what we had going into the last crisis. And all the machines care about is the direction of the market and flows. And this is one thing that even some of the best signal callers in the market, and Hartnett's one of them, well, they don't see. His own bull and bear indicators flash a contrarian buy signal for the past 5 weeks. Stocks have historically risen by a median 1 to 3% from the start of this buy signal, which would represent a target of 4,500 for the S&P. And Hartnett, who has been bearish all year, maybe even more bearish than me, despite a rallying stocks, are just fading above these levels as it closed at 45.08. So here again, you see, he called it. He said it's getting to 4,500. This is my signal. Time to start getting out. But what is the case that this actually goes higher? Well, if you've been watching the Sunday show for the last couple of weeks, you kind of have a clue, but I'm going to show you where it's going to end. Easier financial conditions as bond yields dropped to 4% from 5% have triggered a bullish risk and spurred buying in the asset classes. On the other hand, a further drop in yields to 3% would be perceived as recessionary, prompting a bearish risk, he said, and this is something he's got spot on. Falling bond yields are a sign that growth and inflation expectations are coming down. This gets misinterpreted by equity investors that this is really bullish. Well, in fact, it usually isn't. This party's right about. But let's continue on because a less positive outlook may already be evident in oil prices. Here again, Hartnett's spot on. Oil now in a bear market, down 22% from the September high on recessionary demand or peak geopolitical risk. Now, the only question is, do the machines even care about all this stuff? The answer is they don't. Now, will Hartnett be right about his calls? The answer is yes, he absolutely will be right. The question we have is when and what happens in the meantime. Well, with that, now let's head over to Goldman, where we start to look at what the machines are up to because they think Hartnett, well, they don't even care what he says. Because what it matters is flow of funds. As we looked at the Goldman Sachs Tactical Flow of Funds report here for their November update, they're still the driver of price action and remain favorable for both stocks and bonds. And as they say, flows are greater than fundamentals, and they are absolutely right. But this flow dynamic changes in the beginning of December. And so that says maybe you should hang on a little bit longer and keep in mind what Hartnett's saying. But again, watch the flows. And here we can see there's 31.5 trading days left in the market for the year. And what we can see is the equity CTA flip. They're still short by 6.1 billion, and they're modeling further deleveraging. So it's important to understand is when these machines are short and the market rallies, they lose twice on their trade. And that's why when the market rallies and the machines are short, they come out of that very quickly, and then that causes usually the market to go even higher. And then what happens there? They buy some more. And again. And here you can see over the next week, we've got a green sweep lined up. 68 billion to buy in global equities, 38 billion in the S&P. There's your flows in an uptape over the next month. See, this goes against what Hartman is saying because, again, it's all about the machines. 99 billion of global equities to buy. Notice 38 billion in the S&P. Notably, this is front loaded on the S&P all over the next week. As we look to the next month, you see flat tape 83 billion in global equities to buy, 42 billion in the S&P. Up tape 212 billion global equities, 43 billion S&P. Again, seeing all of the S&P buying is front loaded. What that suggests is global equities may be the undervalued sector here. Let's take a look at the CTA positioning in U.S. equities. We see they're at a fairly neutral level here, looking to go higher. They're not at extreme highs. They're kind of in the middle. So again, more buying to come. We'll see what happens after this next week. And what about the demand we're seeing from buybacks? Well, they are there and they are strong. 90% of the S&P is currently in the open window. Here's your key date. You got to put this one on your calendar. November 8th, the buyback blackout window closes. Look for momentum in the market to change after that. This is what we think that Hartnett, well, his story might start to come true. And it'll be 92% at the end of the week with an estimate of $5 billion worth of daily demand during this open window, with some of the largest repurchasers coming back online. November, December remain the best 2-month period for executions, and those corporates running a lower execution pace year to date. November would be the month to increase above our expectations. So we're looking for two things to happen here. Both the machines are looking to buy, and corporates are looking to get all of their buybacks in before the end of the year. And all that tells us is you're going to see these machines trigger. Now let's head over to TD Securities before we get to our own window here, and we'll take a look at over 46.57 to buy in the S&P. Keep in mind Friday's close at 45.14, so nothing to really expect from them. Normally on their last report they said they're at 45.37 to sell. You have to remember now TD runs a very fast algorithm. Now on our reports we have a fast and a slow, so we show you the different positioning. Again, links to our reports in the description below. 3 coupon codes for a free month for each of them. You got to get them. They go quick, so you grab them before they're gone. Now let's take a look at our screens here on the S&P. We see the RSI is at overbought territory at 70. MACD's got a positive cross. What's key here is even though momentum is positive, it can stay positive for a long time. Markets can stay overbought. Momentum Timer Pro. This is our report that takes all those technical signals that you're confused about, aggregates them into one signal, smooths them out, has 12 consecutive daily buy signals. You can see that down here in our 1-month window, our 3-month window, our 6-month window, all showing positive momentum. And because of that, we have a buy it open on 11/3 at 43.30 at .14, up 3.2%. Now that trade that many of you said would never come back, it is up. Friday's closing is at 450.79. We've got our stop loss set at our open price so we can hold that gain, or at least hold that position without taking a loss, and we'll look to raise that. And one thing I want to encourage you to do, upside target 462 with all-time highs in sight. Downside target 50-day moving average. And look at our CTA report, leading the machines. This is why I wrote that report, to show you you don't need to know where they're going. I'll tell you ahead of time. Let's take a look at the S&P 500. We got, again, RSI overbought. We have MACD, big positive cross, racing into overbought territory. And what do you see? We said if it comes down and hits this point, it rallies off it, which it did. It hits into the sell zone. Now, the question we have for this week is, are the sellers strong enough to outpace the machines and those corporate share buybacks? If they do, look for a pullback. That's why we put our stop loss a little bit here below. Let's zoom out to the 5-year chart, because a breakout would suggest that we're actually headed a run at the all-time highs. Now, we said our next target is 462 on the SPY. That's right up in here at one of these recent highs over the last 2 years. That is our upside target. Good. We do think sellers are going to show up here. The question is, are buyers stronger? Will that pull people that got out back into the market? And I think it will in a big way. Watch and see. People love to play chase. Now, let's take a look at tech stocks. We see the same trend going on here. Momentum positive. RSI overbought territory at 69. MACD total positive across. Our momentum timer pro. Again, 12 consecutive daily buy signals. We told you where the technicals were going before the market found out. How about this? We had to buy it open. That's stuck. This one back on October 9th. We didn't get stopped out on this. We're up 6.6%. What a beautiful trade that's been. Stop loss level, we're raised up so we can hold a little bit of that gain if there's a big reversal. Upside target. Well, we called 387. We got to 386. Pretty close. I think one of those intraday highs was really close to our target. Next, we're going 398.85. Yes, I think the upside is there. And note, look at our machine positioning. 100% long. We told you where the machines were going before they got there. That's the value of our report. All right, let's take a look. 398 is where we're headed on QQQ. So you can see we're just about to break out. What did we tell you? This was a flagpole. This was a bullish flag. Go look it up. You can check your search engine. You'll see all kind of reports on what a bullish flag is. There it is, breaking through these shorts, pushing higher. Let's take a look where this goes. 398. Well, that would be, whoa, right up here to the all-time high. Could that happen? Could we get a double top? Could we break out? Look, my friends, I think there's every case this thing could break to new highs. You want to watch investors come in and play chase at the time the machines start to run out of steam and the corporate share buyback window goes into the blackout early December. If you don't think that can happen, stay tuned. It will. All right, let's take a look at the bond market. Again, we see a rally in bonds coming as Hartnett mentioned, suggesting that is not bullish for equities. Well, he's got it right. But let's take a look here. Global fixed income CTA short cover demand is also in motion. And of course, according to Goldman, we got a green sweep next week. Flat tape. This is global bonds. Again, $25 billion to buy, $91 billion in up tape. So there is some potential that these machines could drive the tape higher and trigger again. And how about over the next month? Flat tape, nothing. So we got front loaded over the next couple of weeks. But look at this, and an up tape, $430 billion of global equities to buy, making bonds maybe the easiest trade you've got. We'll update you on what we've got going on here. How about we look at TD Securities, over 109.92 on the 10-year to buy. Friday's close at 108.77. So this needs to get a little higher before we see some triggering there. The downside trigger just below Friday's close. So we'll see how this goes into the week. How about we head over to Nomura? No selling here, but over 110.10 to buy, suggesting that, again, all these machines are very close to triggering their next window. And with that, let's take a look at our screens, because what did we tell you? We said the machines are going to trigger. Our own report, here it is, CTA Time Pro, telling you, look, the machines are going to go long in a big way, and we told you this ahead of time. But let's take a look. RSI 59, positive cross on the MACD. Overall momentum is positive. We have 13 consecutive daily buy signals. Now, we open this trade without stop loss, which we don't recommend, and because of that, we've had to make 1, 2, 3 purchases here, and we've shown you that if you get in a position where you didn't stop out or you didn't put one on properly and you get behind, you can recover. So currently this trade's down 6.4%. Our cost basis is 96.18. Friday's close at 90.04. Of course, you're wondering, why didn't we just get out? Well, if you knew the machines were super short and you see what was coming in the economy, there's no reason not to stay in the trade and use the signals as we tell you to get out or to dollar cost average and then get out later. And sure enough, that's exactly where we're at. Upside target unchanged at the 100-day moving average. Let's take a look at TLT here and see what we've got. Again, momentum's positive here. This is beautiful. The RSI is rising. It's not in overbought territory. MACD is looking like it's there, but we think this next fill is on this gap right here, right at the 100-day moving average. This is where we think the machines are next going to drive the tape up to, and that's putting in a beautiful bottom. Got a head here, a left shoulder, maybe a right shoulder over here. Potential pullback that could give us a nice deeper right shoulder, but with these machines buying, we're likely to see some upward mobility here. Again, making bonds perhaps one of the easiest trades, and we're showing you how to use our reports. It's super simple. When they come off that max short position on the CTA, we say that's a buy signal, and if you pair it with a momentum timer pro report, you wait for one daily signal on the momentum. If you see both, that's where you do a buy at open. Throw a stop loss underneath there. You say, Steve, can it really be that simple? Yes, it can. Let's take a look at gold. We have buying over 2,000 an ounce, selling below 1967. Friday's close at 1983. Looking potential breakout in gold. And what do we tell you on our reports? That if we saw the signal, and we did on Friday, on November 17th, that would be a buy at open at 183.96 on GLD. Momentum's positive, just barely. We're only down a little bit, not a big deal. You can see if these machines start to trigger, and who told you ahead of time? Again, our CTA Time Pro, and there's our Momentum Time Pro telling you the momentum signals are positive. Upside target is at 187. We've got our stop loss a little bit below here just to put some margin on this trade. Like to have and I don't mean margin in terms of borrowing money, I mean margins on letting the price fluctuate a little bit. Some people put them on too tight. But hey, that's what you're comfortable with. You should do that. Let's take a look here. Upside 187. That means, let's zoom out here a little bit so we can see. 187 puts us right up here near this kind of bottom end of this range up here. A breakout over that bearish pattern here that we saw, this left shoulder head, right shoulder pattern. Now look, we have the opposite. We have a left shoulder head, right shoulder on the reverse angle. We want to see this thing break out over this neckline here. And that, my friends, would be super bullish now to at least take us a run at the potential recent all-time highs, which of course would be the all-time highs. So we got a chance here to make a quad top. I think this is a great potential trade. Again, use your stop losses appropriately. And now let's take a look at GDX, because we got a pair trade here as well on November 17th. The signals came together, so we have a buy it open on that, down 0.9%. Now, notably, momentum just flipped the following day. Over the weekend, that's fine. No big deal. We're still holding on to this. We've got the stop loss at 27.44. Giving again some room to wiggle here. Upside target 200-day moving average. Look, if gold breaks out, stocks continue to rally, the miners are going to follow. Again, we think the 200-day moving average is the first point with the upside potential. I think this thing can get into the $31 to $32 range pretty easily here. You got a left shoulder, you've got a head, you got a right shoulder. Technical basis, you've got your neckline right here at 29.56. Breaks through that, you got some upward mobility on this trade all day long. So keep that in mind. Now, let's take a look at our dollar bullish trade, which we actually said we're taking the opposite side at UDN. I showed you how to hack the reports. I showed you, look, wait till the machine positioning starts turning down, and you see a -1 on the Momentum Timer Pro report on the daily signal. We got that on 11.6. We had to buy it open on UDN. This is a dollar short position, so keep that in mind. You can use the reports in both directions, even if you don't have the exact signal you're looking for. And many of you said, no way this trade's going to work. No way, you got it wrong. In fact, when we took the trade, the dollar rallied. But now look, we're up 1.3%. This on just a dollar bearish trade, and we think there's way more upside on this. Let's take a look at UUP. We see this beautiful topping pattern now in UUP, saying the dollar's headed lower. How about UDN? Let's flip over there and look at the volume profile here on the 1-year chart, acting as wonderful support, validating this looks like a bottom. We see a lot of upward momentum here, and we did not put a stop loss on, so I'm going to just tell you right now we should put a stop loss on. We're up 1.3%. Let's do this. Let's just say there is now a stop loss being added at our buy at open price of 18.62. Want to hold on to that and then raise it accordingly. So I'll update the slides from there. Now let's take a look at our next position on platinum. Buying over 920 on the machines. Friday's close 905. Again, no sign the machines are helpful here, but if the machines jump in, well, watch out. This price is going to drive. Many of you said, I'm never getting out of this trade either. Again, we put this on without a stop loss, and now we have 1, 2, 3, 4, 5 positions. We're just going to continue to dollar cost average as we use the reports and signals. And look, we're only down 2.8%. We're within striking distance of our original purchase price. Upside target is the 100-day moving average. Let's take a look at what's going on with platinum. That's PP. LT, here we see 100-day moving average, the next sign here. You get some of these machines to trigger, and this can easily break out to the 200-day moving average, back up into the $90 price range, put us into a nice positive trade. Again, showing you, look at this bottom, you have 1, 2, 3, 4, 5 times people are coming in and buying this. Let's zoom out to the 5-year chart. What do you see? This is a great zone. Everybody wants to buy this position. Let's look at the weekly chart. Go here to the 10-year weekly, and what do you see? It gets down into this range. It gets bought, and look at there's your volume profile. 89.92 over the 10-year, telling you where the next upside target will lie, somewhere between 90 and 93. So we think we're getting out of this trade with a gain. I know a lot of you say, no way. We'll watch and see. How about palladium? This one we're looking to add. We have not taken a position in this. Buying above 1163 on the machine's Friday close at 1061. Why are we excited about palladium? Well, sure, the dollar is going to go down. That's one of them. But look at this. We're at max shorts on our CTA report, and we got a +1 on our Momentum Time Pro. So the moment this moves off of here, that's your buy at open signal. Says here, wait for CTA confirm short covering, and then you go. Upside target is 106. Shouldn't be the 500. It should be the 50-day moving average. Can you imagine if we were trading the 500-day? That would be insane. How about this? RSI's coming out of that deep oversold position. MACD's got a positive cross. Let's just look at the chart. Now, I haven't put any signals on here because look at this thing. It's been going down a bunch. In fact, you might think this thing's going down forever. And that's sometimes where opportunities lie. Look at the weekly here. This thing has just gotten obliterated. So at some point, there's some upside potential here, and we want to be a part of that. And that's what you're looking for. And the reports are telling us, look, there's possibility here. We're not saying this will work out, but we're saying if we get a signal on this, we're going to put a stop loss fairly tightly underneath this one. See if we can pick up a nice gain on a weaker dollar, on a rally on palladium. So there you go. There's the free one from the reports. All I did was just look at the reports, use the signals, and as you're going to see, we'll see how this plays out. We'll add it as a follow-up to our list. And remember, again, only 3 coupon codes left as of today. Get them before they're gone. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.